Look into its eyes. It sees what we can't.
Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Yeah, yeah. 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 Yeah, yeah. Listen, babe. Listen, babe. Listen, babe. 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 Yeah, yeah. Listen, yeah, yeah. Listen,
Hey there, I hope that you are doing well. It has been a while since I created an educational video, so I thought it would be time to make one again. For the past few months, my channel has been flooded with motivational speeches, and the response to them has been great. However, I do feel like I am able to provide a lot of educational value, so therefore I will start posting educational breakdowns again. Anyhow, enough of the chatter, let's dive straight into today's breakdown. The breakdown that I'm going to do is of a trade that I took on the 19th of July. It was a market maker buy model on ES. In order to understand the reasoning behind this trade, I'm going to take you to the weekly chart first. Here we are on the weekly chart of ES. We have seen this clear bullish order flow all the way since June. Do you see how many green candles are here in relationship to how many down close candles, black candles there are? There are only two down close candles within this whole run up. So the order flow is clearly bullish. We were targeting this weekly volume imbalance for a while now. My private group, the ones that know, had this level or these levels on their chart for a while. And when we saw that the market broke above this volume imbalance high here, the volume imbalance is between the close of this candle and the open of this candle, so between these two red lines, we needed to adjust our targets. So we had to look for a higher target than the current market price. So what were we targeting? We were targeting the low of this candle right here. Why? Because here, between this candle and this candle, there's a gap. And not only a volume imbalance, no, there's a lack of buy-side delivery. So the market will seek to reprice back into that price range to offer buy side. So let's go down into a lower time frame. Here we are on the hourly chart. Keep in mind that this big fat blue line right here is the high of the inefficiency, of the weekly inefficiency. What type of inefficiency? A CB. A sell side imbalance, buy side inefficiency. What we saw on Tuesday was that the market during the PM session repriced higher and immediately rejected here. And then the market started consolidating all throughout Asia. Market opens up on Wednesday, trades higher, fails to trade higher again, so it starts to consolidate. Then New York begins. What does New York do? It purchases sell-side liquidity and it immediately reverts higher. Why does that occur? Because the higher time frame institutional order flow remains bullish. What are we targeting? We're targeting the previous day high and that big blue line right here. When we go down into the lower time frame, we will see why this previous day high was so significant. Let's go down into an M15 chart. Here we are on the M15 chart. Take a look at this consolidation right here. This piece of price action. Here we are on the M15 chart. Take a look at the Here we are on the M15 chart. Take a look at Tuesday's price action. Do you see how the market gave the idea that it topped here? What would a retail-minded trader think when he sees 2 wicks right here at approximately the same price level? What would a retail-minded trader think if he looks at a market like this that seems to have a lot of resistance breaking through a specific price level? Because you see that the market is not wicking higher than that price level. So there must be a lot of resistance, right? That's the idea that a retail-minded trader would have when he sees something like this. So what he does is that he tries to go short and put his stop loss, which is a buy order, above those highs. And we know that the market is drawn to either liquidity or inefficiencies. So, like I said, a market does not top like this. Here you can see that I've added the previous day high and the midnight opening price. The reason why I've added the midnight opening price is because I want to put emphasis on the concept of power of 3 in today's breakdown. The concept of power of 3 is something that I've recently made 2 threads about on Twitter. I will leave the links in the description to the threads if you're interested in reading them. But what the concept basically is that ICT taught us that if we were bullish, we would want to look to either buy below the midnight opening price or in close proximity to it. This is something that has been taught within the 2022 mentorship as well, with regards to opening prices of sessions, such as the New York session, but we'll get into that later on. First of all, we can see that buy side got engineered here and here at the previous day high. Do you see that a trend line can be drawn from this high to this high to this high? Like that. That's a trend line phantom. But Zeus, why are you not looking at the lows as a trend line phantom here? What is the narrative? What is our narrative? We're expecting higher prices, right? So we're looking for reasons to justify higher prices. We do not try to capture tops. It's that simple, especially in the market environment that we're in right now. Just keep on trading with the institutional order flow. And if the institutional order flow is bullish, we look for buys. Simple as that. Until our higher time frame price targets have been reached. What we can see, what happens is that sell side gets purged here and the market immediately reverts. What is it drawn to now? It's drawn to buy side liquidity. Here. The viewer that is paying attention is seeing that I've added something to the chart, an indicator on the bottom here that represents the ICT kill zones. I want you to take a look at the buy side and sell side that I've annotated. Do you see what I'm pointing at? Boom. London sell side, London buy side. What I'm showing you here is time-based liquidity. Time-based liquidity is basically liquidity that is significant because it got formed within a particular period of time. During New York, what you often see is that London sell side gets purged and then a revert happens to London buy side. It's that simple. Go into your charts and start looking for it, and it's there. Here's a screenshot from the time PDF that I've written for the ones that know back in February. This is a simple but very effective time-based draw on liquidity cheat sheet. And if you study this, if you go into old market data with this idea in mind of time cycles and utilizing those time cycles for liquidity purposes, I promise you that you will start to see things that you were simply unaware of yet. So make a screenshot of this image and let's continue. Here we are on the M5 chart. I've annotated everything from the market maker phases. If you do not understand what market maker models are yet, I would highly advise you to watch my lectures about the topic. I've given pretty advanced lectures about market maker models, in which I basically describe what they are, how they can be utilized, and I describe every single phase within a market maker model. So if you want to look at them, just go on my YouTube channel and you will find the lectures about them. Anyhow, what we can see is that an SMR, a smart money reversal, formed below the London sell side before the 8:30 opening. We had high impact news at 8:30. As you can see here, this is a screenshot from Forex Factory. We can see that the market retraces into a BC here. And this is your low risk buy. Why is this your low risk buy? Well, take a look here. What do we see? We see an intermediate term high, a crucial high, getting broken. Change in the state of delivery. We'll touch on that soon again. Market retraces, expands. What does it break? Again, a crucial high. Why? Why are these two highs crucial? Take a look on the left side of the curve. In what did these highs form? CB. CB. Market expands above this high. What gets created? A BC. Buy. Where's your stop? Below here. Why can your stop be below this low? Well, think about the logic that I've just described here and invert it. If you are bullish, you do not want to see this low right here get broken. Simple as that. Market expands, boom. And let's talk about PO3 again. At 8:30 here, the market opens up. Due to swing lower into this BC, creating the low of that time cycle, and the market starts to expand. But why would you still be able to buy here? Because it is in close proximity to the opening price, so you're still buying in a deep discount. A deep discount of what? A deep discount of the current dealing range. What is the dealing range? The dealing range is from this high right here all the way to the low of the SMR. Measure premium to discount, and you're buying in a discount here. Like I said, stop can be below this low if you buy here. Why? Because otherwise you're going to have the logic that we described here inverted. So you're going to see a bearish market structure shift if this low was to be broken. And here comes a gem for you guys. Because I dubbed the market structure shift concept 8 months ago and 9 months ago, something like that. You can go on my YouTube channel when I first started talking about them. And it was a fun journey to publicly share my findings with regards to what defines a real market structure shift, or CSD so-called. And we came to the conclusion that this pattern right here of an intermediate term high, or whatever you want to call the high, simply a high or low that forms inside of an imbalance, when it gets broken, you often see that the market starts delivering either to the upside or to the downside. It's relative to the market structure. But this pattern fails when this high right here is the low of a higher time frame imbalance. Let me repeat that. This pattern fails when this high is the low of a higher time frame imbalance. So we're looking at M5 right now. But keep in mind, this high could be the low of an M15 CB. And if our narrative was lower prices, if we were expecting lower prices, then this right here would just be a retracement into that M15 CB before potentially delivering lower. But because our narrative is higher prices, we look at this as a market structure shift. Here and here again, market structure shift. And another common question that I often get with regards to market structure shifts is, but do you need a candle close above it? No. As soon as the market trades above this high, it's a change in the state of delivery. And the market will now start attacking buy-side liquidity. It's in a buy program. Higher prices will get delivered. So here's a more advanced chart. And here I've annotated a concept that ICT introduced this year within the 2022 mentorship. It's the concept of inverse fair value gaps. What IFVGs are is basically that when a fair value gap gets overrun, you expect that fair value gap to start acting as true support and resistance. The concept or the theory behind this is based around balanced price ranges. The theory behind balanced price ranges is pretty familiar to a lot of old students of ICT. But for the newer students, just keep in mind that if a fair value gap gets broken, you want to see that fair value gap starts to act as support or resistance on price. Let's take a look how that occurred within this piece of price action. We saw that this CB right here got overrun. Look how it starts to act as support. Higher prices. This CB, purple shaded box. Look where the body goes here. What occurs once the body goes above it here? Look where the body goes. The wicks do the damage, the bodies tell the story. And the final inverse fair value gap. Look at the bodies, they stay inside of it. What happens when the market closes above it? Look at the bodies. Perfect. Look at the open of this green candle here in relationship to the low of this CB. Precision. Then the market starts to expand into the buy side liquidity pools. And here's my final chart that I want to show with you guys in today's breakdown. This was the London high, right? Do you see how it gets broken and the market retraces? What does the market retrace in? Into consequent encroachment of this wick right here. Why did the market expand so tremendously higher at 9:30, you might be wondering? Because you have gaps right here that are allowed to stay open, and that is a sign of speed and velocity. Whenever you see the creation of a breakaway gap and a measuring gap, the chances of you being on the right side increase significantly, and you are pretty certain that it's going to run. I hope that you found this breakdown insightful. I enjoyed breaking down this lecture. I hope that you found some interesting insights into it. I wish you good luck with studying what I've shared with you, and I hope to see you in a new video. I wish you all the best and good luck with your studies. Be safe.